Okay, so good morning, everyone, and welcome to today's macro snapshot. We're at the month end, so it is Wednesday, November the 29th, 2023. Okay, so we had quite a lot of market action yesterday. Obviously, what kicked that off is just this idea that the market is really starting to look excuse me, ahead and start anticipating and not only a permanent end to the Fed's hiking cycle, but it's also really getting much more interest in this idea that the Fed will start to cut at some point. And so what we can see, let's actually just go on to what's priced in at the moment and just see what's going on here. We had a pretty big change yesterday because a couple of Fed speakers came out, but specifically Waller. Now, Waller is a voter and a pretty well-known hawk, but he came out yesterday and essentially said that he thought that were inflation numbers to go down and to go in the right direction over the next, and he actually used 3 to 5 months, there could be a case for rates not to be as high, basically rate cuts. So that was the first time that we'd heard someone from the Fed specifically mention a time frame, specifically mention the possibility of actually lower rates. And also he talked about financial conditions and said that despite the fact that yields had come down, he still thought that financial conditions were relatively tight. So there was absolutely no pushback on this idea that, yields have come down, therefore maybe we need to tighten a little bit more. And the fact that he did give some kind of time frame, he actually, I think, mentioned 3 to 5 months as a time period, and he actually mentioned sort of the magic words, lower rates, that got the market very excited. We also had Williams, who of course is the head of the New York Fed, saying that he was, relatively happy where sort of inflation, sort of the path of inflation was going. The only thing which was interesting was that Michelle Bowman came back and was actually pretty hawkish. She came out on the wires, I think it was like 30 minutes after Waller. And Bowman was pretty hawkish. She was basically saying that the job against inflation had not been accomplished. There's still more work to do. That her base case was maybe that more hikes were needed, but the market completely ignored her. So it's interesting that it's like the market was looking for some kind of validation of dovishness. So we'll see if it gets some more sort of backup from Powell. But in the meantime, let's just see what's going on here. So as you guys can see here, what we now have is for the May meeting, that's now almost fully priced in for a hike. Now that's gone down a lot, and you can see here that if we now look at the terminal rate, which is about 5.5 1/3, 5.33, if we go down by the end of 2024, it's that's over 100 basis points now. So that's a pretty significant change. So if we look at it, just a couple of metrics here, let's say, for example, May, which I've been looking at, you can see, I'll put it on a short term. This is the number of basis points priced into the market. So I'll put it on, let's say, just over the last 2 days, a 3-minute chart here. You can see, so pretty crazy. You can see here, this is the comments of Waller here. So they've kind of just been drifting down. And then on Waller's comments, just continued to fall. And then overnight, you see here in the Asia Pacific session, and then even the European session, falling another few basis points. So basically, before Waller started speaking, the market was pricing in, let's call it, about a 50% chance of a cut by the May meeting. But, here we are sort of 24 hours, not even 24 hours later, and we have a full cut priced in for May. So pretty dovish. We also had, overnight, we had Bill Ackman, pretty famous sort of investor, not shy about expressing his views, saying that he thought the Fed might actually have to cut even in the first quarter. So sometime in, January, February, March or so. So a lot of sort of dovishness coming into the market. We could also look, for example, just want to have a look here. So I've got stuff on my screen here. Just want to look at, let's say, the Fed's funds curve and just see how that's changed. So if we that's where it is now in terms of the implied yield. But if we put that, let's say, compared to let's say, put it on the live one, I just wonder if that's going to update and put it, let's say, from a week ago. Sorry guys, I'm just going to zoom in here a little bit. So you can see that the live one is let's have a look here. Yeah, the current one live is the green here, and the blue is from a week ago. As you can see here that all across the curve, that's been sort of pretty much sort of downgraded, so dovishly repriced here. So very, very dovish. And what's going to be absolutely key is that we have the core PCE numbers coming out tomorrow for the month of October. And it's going to be very interesting to see whether those inflation numbers are coming down, and that supports the narrative. If those numbers are lower than expected for the core PCE tomorrow, that's going to support the narrative that inflation is indeed on the way down, that the Fed doesn't have to be as aggressive, and that we're in sort of happy land. And of course, the big one is that we have Powell speaking on Friday, so it's going to be very, very interesting, and in fact crucial to see if whether Powell pushes back against this sort of dovishness, or is more neutral, or perhaps even is a little bit hawkish and more like Michelle Bowman, and that could give the market a sort of a nasty sort of cold shower. So let's keep an eye on Powell, but the core PCE. But let's say, for example, the core PCE is sort of lower than expected or sort of in line, and let's say, for example, Powell is neutral, or even sort of relatively sort of sanguine and dovish. That could cause a real rally in the bonds and some other assets. So let's talking about that. Talking about inflation as well. What's interesting, guys, that we had some Spanish inflation this morning, which was lower than expected. Also, if we had a look at the German inflation, we had German inflation numbers, at least from the provinces, from the different states here. So if we actually go there, you can look here. And basically what happens in Germany, you first of all get the different kind of states. So we have the Hesse, Bavaria, Brandenburg, Saxony, and Baden-Württemberg. And as you guys can see here, much lower than expected. So you can see here, month over month here, minus 0.4 compared to this one on the right-hand side here. You can see Bavaria month over month, minus 0.4 compared to 0. Württemberg, you get the picture here. And basically we're going to get at 8 o'clock in about an hour or so. We'll get the overall numbers for Germany, but we already had Spanish numbers which were lower than expected. It's looking like the German regional numbers are much lower than expected. So if that's confirmed by the national number coming out of Germany in about an hour, that's certainly, at least in the European space, going to be giving credence to this idea that inflation is on the way down there. And therefore that's also supporting the yields coming down over in Germany, and even on Italian bonds and French bonds as well. So interesting, very interesting. Okay, so let's just keep on looking. That's why we've got this up here. Let's look at the data today. Is there much data today going on? Not a huge amount. What we have today, we have the second reading of the GDP. Again, that's going to be quite interesting, because although normally this is not supermarket moving, the market now will be focused just to see whether the GDP, if this is revised upwards. We're trying to understand this whole idea that, okay, inflation seems to be cooling, but what about the what about the real economy? What about the consumer? Yesterday we had consumer confidence, which was a little bit higher than expected. So it seems as, and we're also starting to get some numbers from the Cyber Monday and the Black Friday kind of online bonanza. That seems to have been pretty strong, although subject to very big discounts. So there are a lot of big discounts were needed to get sort of people to spend, although people did spend a lot last Friday, Saturday, Sunday, Monday. So it looks as though the American consumer is still spending. It looks as though the labor market is still strong, although cooling a little bit. So again, this is just going to be interesting to get a sort of the second read here on the GDP. I'm just curious to know, let's say that's revised, stays in line, or is revised downwards. That would give, again, as I say, credence to the whole narrative that, things are sort of slowing down a little bit. But it's going to be quite curious to see whether this is revised upwards, maybe even significantly, whether the market chooses to ignore that or actually reverses a little bit of yesterday's price action. So that's definitely something to be looking out for at 8:30. I mean, tomorrow we've got some data, but I guess we'll talk about that tomorrow. Okay, so just looking back at a few charts here. I mean, obviously what happened is that just on the back of that, we still have the VIX, which is at a very low levels, spiked momentarily, but essentially the VIX is at low levels here. We also see the MOVE index, still pretty low. So bond volatility low. But what is interesting here is the equities. It got my attention that equities yesterday, initially on Waller's comments, rallied a little bit, but they gave back a little bit in the afternoon session. Was pretty choppy. It is complicated because we have month end, the 29th today, the 30th is month end tomorrow. There's some kind of rebalancing flows. There's obviously been a huge run up in equities. Was there some kind of rebalancing from equities into bonds? Was that part of it yesterday? But what we're seeing yesterday, because to put that in simple language, I was a little surprised that equities didn't have more of a bounce yesterday because everything else was took Waller's comments and Williams' comments as being pretty dovish. But now what we're seeing this morning is that we are starting to poke through resistance here, at least on the ES. And if we look at NASDAQ, just on the futures here, you see NASDAQ also getting up towards recent sort of cycle highs. So it looks as though if the equities, if the dovish tone continues, It would not surprise me to see equities pushing through. That's the Z contract, so that's the December contract. So coming up to a little bit of resistance, though, you've got to say on the December contract. So that could be interesting, at least on the Z23 contract at about, let's call it about 4,600 here. But basically, equity is looking quite good. Just curious, we'll pop in with the looks like a nice sort of sideways consolidation. Could be about to break out on the Russell as well. Going to be quite interesting here. There's really sort of very tight inside days and consolidation. But if the rest of the indices, the Nasdaq and the S&P go, you've got to think that the Russell could at least test up towards a pretty key level here, which is about the 1830-ish level where we had some resistance before. So quite interesting there. Just looking at the small caps as well. The equal weighted, not quite as excited, although you do see in the pre-market up a little bit. So you want to see the breadth of the rally continuing. So let's keep an eye on that. And of course, that's all going to be pretty much dependent on the bonds. So let's just look at some of the yields here. Yeah, so obviously the big mover downwards yesterday was the 2-year. And I'm going to be honest, that actually is broken below. I have a little bit of a value box here. I didn't really think the 2-year at this point would break down so aggressively. We do have a little bit of resistance here. And I think, to be honest, it's going to depend on the data, the PCE tomorrow, and mainly on Powell. If Powell, as I said, the big issue here was pause. What got the market excited yesterday was that the market has basically taken the comments of Waller and Williams as a pivot. So not just a pause in the hiking cycle, but like, it's forcing the market to look forward maybe 3, 4, 5, 6 months. And then you can see here a very aggressive move down in the 2-year yields, which has continued, a little bit in the overnight session as well. We see the 5s also had a strong move down. The 10s, they're down below that 4.311 level, which was pretty key. Just giving a little bit back. I wonder if we'll get some stabilization, and the 30s as well. If that's coming up. Yeah, the 30s also moving down, but not as aggressively. So, of course, that caused a classic Fed pause, Fed cutting kind of front-end-led bull steepening yesterday. If we just bring up some of the curves here, we can see the 2s, 10s had a pretty big a green candle, which is the bull steepener here, so steepening upwards. We also see in the 2s, 30s had a steepener. And then the 5s as well, giving back a little bit on the 5s. It's come a long way in one day. Those who are on that's great. The real question now from a sort of a medium-term perspective is, can you buy this, or do you need to wait for a pullback? It's tricky, because if you look, let's say, on the 2s, 30s, which has always, as I did a video about a week ago, as we know that in cutting cycles, the market tends to anticipate by 3 or 4 months the cutting cycle. So if we believe that the cutting cycle is now going to start happening in, let's say, something like May, you've got to say that over the next month or 2 or 3, the market really should start the steepening. And again, we've gradually been doing that. We had a nice pullback, so we're just there. So if we put it in the context of what could happen over the next 6 to 12 months, we could get a steepening which goes up, 100 or 200 basis points. So let's say we're at minus 22 now on the 2s, 30s. The first level here would be, let's say, plus 60. So that's about 80 basis points, and then maybe even up, another 100 or so. So there's plenty of room to go. No need to panic. Personally, we're starting to build a little position here. Be nice to get a little bit more of a pullback. The real question is here, what would the lows be? You've got to say that, on the 2s, 30s, something like around about the minus 40, which is sort of this level here, approximately there and there. You'd have to say that it would be unusual for the market to flatten more than that. What would cause that would, of course, be problems with issuance. So you could get a long-end-led bear flattener if the issuance problems come back next year, or is perceived to be coming back next year. Of course, if we get sort of a hawkish pushback maybe from Powell, we could get that be a front-end-led sort of bear flattener. Or if we just continue maybe to get sort of hotter than expected inflation and real economy data. So there is the possibility that flattens more, but really the issue is, is it going to flatten more than, I don't know, maybe another sort of, let's say, maybe 18 basis points. That's the issue. So that's definitely what we're looking at the moment. Of course, we had gold yesterday, just looking at what's happening. Gold having just a massive breakout, and you see overnight here on the futures just kind of gapping up. That's pretty crazy here. So at this point, you've got to say that we're well above this resistance level. Yesterday completely broke through. It gapped up, a lot of attention here. We have the Fibonacci extended move. We're starting already to get into that sort of Fibonacci extension. Very, very simply, we have resistance at 2084. If we go back on a weekly chart, you can see that we're getting towards a quadruple top. A lot of technicians say there's no such thing as a quadruple top. So I guess what could happen is that we test up here. Is there going to be a pullback? I assume so, because at this point the real yields have come down, but they're still relatively high. But on the other hand, we have a sort of a soft US dollar. So at this point, it's a bit tricky to get on this run. Maybe wait till it gets up here, maybe wait for a pullback. Or if those of you trying to sort of clip a little bit on as day traders, maybe any kind of little pullback here with an eye on these levels here. So gold absolutely ripping. And that's also on the idea that if the Fed is definitely pausing and maybe even cutting, that means they're going to have technically a less focus on inflation. And let's remember that inflation is still at relatively elevated levels. And that means that, if as the Fed has less attention on fighting inflation, historically gold performs pretty well in that little window where inflation is still not completely killed and completely not at lows, but the Fed's attention seems to be elsewhere. So gold doing extremely well. We also can have a look at silver and see that silver not as aggressive, but moving pretty well as well. So obviously we have the yields down, and of course this is putting the dollar under pressure. We see the US dollar here. This is the dollar index pushing down. I thought they might get a little bit of resistance at the 102, at the 103 level, but that's not the case. So we see the euro also blasting up towards the 110. But you've got to say, I mean, can this rally continue? Of course, any rally can continue, but with the ECB being almost as dovish or as dovish as the Fed, and we're seeing that inflation coming down as we saw this morning in various European countries, and Lagarde being relatively dovish, you've got to say, is the euro? I mean, really, can this keep on going up to, I don't know, 112 or so? That to me seems a bit of a stretch. So at a certain point here, I think it's relatively fragile. We just need a little bit of hawkish rhetoric from, let's say, Powell. Maybe we need a little bit of disappointment on the inflation or real economy numbers, but that to me starts to look a little bit stretched. But hey, maybe the momentum's there. It could definitely push up a little bit more. What we did see also, we see that, for example, the Aussie dollar, New Zealand dollar doing pretty well, Canadian dollar all doing relatively well, just giving back a little bit this morning. Just on the New Zealand dollar, we had the Reserve Bank of New Zealand last night. It was a hold, but fairly hawkish. And Governor Orr basically reiterated the fact that, inflation absolutely was not defeated, that, if inflation didn't come down more, that the overnight cash rate, the OCR, would definitely need to rise. So more hikes, plural, are going into next year. So the New Zealand dollar got a nice 1% pop on that. But as you can see here, giving back a little bit. Good time to check in with the yen. The yen continues to strengthen a little bit against the dollar. Interesting. I mean, is this on the way down? But technically, we're still in this up channel here, which I might just extend just so we have that there. So we're still technically, in the channel here. Although you have to say there was a board member of the BOJ out overnight saying that, a lot would depend on the wage negotiations next spring. So it could be that over the medium term, if the Fed indeed starts to cut, U.S. economy weakens a little bit, and the BOJ starts to tighten a little bit, we could actually see the yen, have a decent move here, maybe down to, certainly down to 145 or even maybe into the 140 kind of level. I was reading someone this morning talking about 132s, which seems quite a long way away. But we have seen this kind of retracement before. So although this looks like a lot, I mean, we could get a significant downward move. So I'm going to be looking at that quite carefully just to see what's happening here, because maybe a retracement here, just from a risk reward, maybe a medium term play could be an interesting one to start thinking about getting long the Japanese yen, maybe even against something like the euro. Could be interesting because that's gone up a lot. Maybe that's even a more interesting way of playing that. So that's definitely something to be looking out for there. Apart from that, guys, just want to keep an eye on oil, having a little bit of a green candle today. We obviously have the OPEC Plus meeting tomorrow. It's going to be very, very important. We'll talk about that a little bit more tomorrow. But oil here, is that breaking out of the downtrend, the down channel? I mean, it's a bit of a basic down, it's a weekly there. So I thought, let's just put it back on the daily. Whoops. So, a bit of positive price action over the last couple of days. on the anticipation that maybe a deal will be done for some of the African nations, Angola and Nigeria, to reduce production a little bit, but more specifically, I guess the market hoping maybe that the Saudis might sort of unilaterally decide to cut a little bit more. I mean, that would be a big ask, because they're already sort of shouldering the burden of 1 million barrels a day. But probably this as well, just on lower interest rates around the world, is helping, and also obviously a lower US dollar is probably helping oil here. So let's just see what happens tomorrow. That's going to be either way. I think, if the Saudis come in with a surprise cut and a deal to lower quotas, I mean, this could burst out a little bit higher. On the other hand, if there's no particular production cuts and the Saudis don't extend or don't increase their cuts, I think we could be up for some disappointment here. So it could be interesting, a bit more volatility in the oil tomorrow. Okay, guys, I'm going to leave it at there. At that, so let's keep an eye out for the second revision of the GDP today, and just to continue to see whether we continue to see the steepener, whether the equities continue to push out, and what happens to gold, whether it just continues to go crazy. Okay, we'll leave it there. Thank you for this, and we shall talk soon. Thank you.